In 2025, the American car market is facing a crisis that few could have predicted just a few short years ago. The country's largest car dealership group is now on the brink of bankruptcy. And this isn't just about one company failing, it's a sign of something much bigger, a collapse that could affect millions of drivers, car buyers, and entire local economies across the United States. For decades, buying a car in America followed a familiar ritual. You visited a big, shiny dealership, you shook hands with the sales staff, you negotiated your deal, and you drove home in your new ride. That system is breaking down, fast. Across the country, auto dealerships are shutting their doors, permanently. Small, independent lots in towns and suburbs are disappearing. Even massive multi-brand dealer networks are starting to crumble under financial pressure. And now, even giants like AutoNation and Lithia Motors are reporting deep losses, issuing warnings to investors, and quietly preparing for an uncertain future. How did this happen? Not long ago, the automotive industry was riding high. Demand for new and used cars was sky high. Prices were at record levels. Profits were flowing like never before. Then came the perfect storm. Rising interest rates made auto loans unaffordable for millions of Americans. The cost of living crisis squeezed household budgets. Used car prices began to fall rapidly, wiping out dealership margins. Electric vehicles introduced new competition and disrupted traditional sales models. And on top of it all, consumer trust in car dealers is at an all-time low. In this video, we're going to take you inside this unfolding disaster. We'll show you why America's largest dealership group may be headed for bankruptcy. We'll explore how the entire auto retail business is being transformed. And we'll explain what it all means for you, whether you're thinking about buying a car this year or simply wondering what the future holds for this once mighty industry. This isn't just another market correction, it's the beginning of the end for the car dealership model as we know it. And it's happening faster than anyone expected. To understand why America's biggest car dealerships are now facing bankruptcy, we need to look back at what happened to the car market over the past few years. It all started in 2020, when the COVID-19 pandemic shut down factories, disrupted supply chains, and changed consumer behavior almost overnight. At first, car production came to a halt. Automakers couldn't get critical parts, especially semiconductors. With fewer new cars being built, inventory on dealership lots dried up. Meanwhile, demand didn't go away. In fact, it surged. People wanted personal vehicles to avoid public transport. Government stimulus checks and low interest rates fueled a buying frenzy. Prices skyrocketed. For the first time in modern history, many new cars were selling for above sticker price. Used car prices followed the same trend. Some models even doubled in value in just a year. Dealerships were making record profits. It seemed like a golden age for the industry, but under the surface, problems were building. When supply finally started to recover in 2022 and 2023, a new threat emerged: interest rates. To fight inflation, the Federal Reserve began raising rates aggressively. The result? Auto loan interest rates soared to 7%, 8%, even 10% or more. For many buyers, monthly payments became unaffordable. Cars that once seemed within reach were now completely out of budget. Demand began to dry up, fast. At the same time, the used car bubble burst. Prices that had hit all-time highs in 2021 and 2022 started falling sharply. For dealerships, this was a nightmare. Many had paid top dollar at auction to fill their lots. Now those same vehicles were worth thousands less, and selling them meant taking painful losses. Inventory costs piled up. Floor plan loans, the credit dealers used to finance their vehicle stock, became a crushing burden as interest rates rose. Suddenly, the profits of the pandemic era were gone. In their place were mounting debts and shrinking margins. But that's not all. Electric vehicles added another layer of disruption. Brands like Tesla, Rivian, and Lucid operate without traditional dealerships. They sell direct to consumer. As EV market share grows, legacy dealerships, especially Ford, GM, and Stellantis dealers, are struggling to adapt. Many are required to invest heavily in EV infrastructure, training, and equipment, without any guarantee of profitability. Some are even refusing to sell EVs at all, seeing them as a financial risk. Finally, consumer behavior itself is changing. More buyers are comfortable shopping online. They want transparency, fixed pricing, and a no-pressure experience, not the old dealership model. Companies like Carvana, Vroom, and even automakers themselves are offering online buying options that bypass traditional dealers entirely. Put all these factors together, and you have a perfect storm. Collapsing demand, falling used car prices, rising interest costs, EV disruption, shifting consumer expectations. It's no wonder that dealerships, especially large, high-cost groups, are now struggling to survive. And as we'll see next, some are already failing. So who is actually feeling the pain right now? The answer is almost everyone in the dealership world, but some are being hit harder and sooner than others. Across the country, small and mid-sized dealerships are disappearing at an alarming rate. In 2024 alone, more than 1,200 independent car dealers shut their doors permanently. In states like California, Texas, New York, and Illinois, the closures are accelerating. Many family-owned businesses that had operated for decades simply couldn't survive the combination of falling sales, rising costs, and tightening credit. But it's not just small players who are at risk. Even the giants of the industry are now under severe financial pressure. Let's start with Lithia Motors. Lithia is one of the largest dealership groups in the US, with more than 280 stores across the country. In recent years, they expanded aggressively, acquiring dozens of smaller dealer groups, betting on continued growth. But that growth has now turned into a liability. Lithia's latest earnings report revealed a sharp drop in profit margins. Their used car division posted double-digit losses. The company also reported that floor plan interest expense, the cost of financing its inventory, had more than doubled compared to the previous year. Investors are getting nervous. Lithia's stock price has fallen significantly in 2025, and analysts are warning that without major changes, the company could face serious liquidity issues. In other words, bankruptcy is no longer unthinkable. Then there's AutoNation, the largest dealership group in America. With over 300 stores and more than $27 billion in annual revenue, AutoNation seemed untouchable just a few years ago. But even this giant is now struggling. AutoNation recently issued a profit warning, citing falling new and used car sales and shrinking margins. Internal memos obtained by industry insiders show that AutoNation is now implementing aggressive cost-cutting measures. They're slashing marketing budgets, freezing hiring, and renegotiating vendor contracts. At the same time, some of their regional operations, especially in the West and Midwest, are reportedly under review for possible closure or consolidation, and there's growing friction between AutoNation and some of its automaker partners. Manufacturers like Ford and GM are pushing hard for dealerships to invest in electric vehicle infrastructure. But many AutoNation stores are resisting, concerned that EV sales won't justify the required upfront costs. This tension is creating instability throughout the dealer network. Meanwhile, other large groups, like Penske Automotive and Group 1 Automotive, are also reporting mounting challenges. Floor plan debt is rising across the board. Used car values continue to decline, forcing dealers to sell at a loss or hold aging inventory they can't move. And with consumer demand weak, the traditional dealership model, built on high-volume sales and financing profits, simply isn't sustainable anymore. Behind closed doors, many dealership executives are openly worried. Industry sources say that in late 2024 and early 2025, private meetings between dealership groups and major lenders have become tense. Banks are tightening credit lines and demanding more collateral. One insider from a top 5 dealership group summed it up this way: "We survived COVID. We survived the chip shortage. But this feels different. This feels existential." In short, America's biggest dealerships are facing a battle for survival. Some will adapt, many won't. And the wave of bankruptcies we've already seen may just be the beginning. So where does the US car market go from here? Most experts agree the dealership landscape will look very different in just a few years. And for many traditional dealers, the future is bleak. First, expect the wave of dealership closures to accelerate. Many small and mid-sized independent dealers simply won't survive the current environment. rising interest costs, falling used car prices, and tighter bank lending will push more of them out of business. In fact, analysts at Cox Automotive predict that another 1,500 to 2,000 dealerships could close over the next 18 months. A record pace of attrition. But even the big players aren't safe. Groups like Lithia and AutoNation will be forced to make hard choices. Expect to see store consolidations, regional pullbacks, and aggressive cost-cutting. Some major dealer groups may attempt mergers or sales to avoid outright bankruptcy. But not all will succeed. Behind the scenes, banks are already pulling back. Floor plan credit, the financial lifeline of dealership operations, is becoming harder and more expensive to obtain. Without it, many dealers simply can't function. Meanwhile, automakers themselves are rethinking their approach. Tesla has proven that a direct-to-consumer model can work, and many legacy brands want to follow suit. Ford, for example, has already announced plans to move more sales online and reduce its reliance on traditional dealers. General Motors and Stellantis are exploring similar strategies. This shift will further weaken the position of traditional dealerships, especially those that resist change or can't afford to modernize. At the same time, consumer expectations are evolving. More Americans now prefer a transparent, hassle-free online buying experience. They want fixed pricing, fast delivery, and minimal face-to-face interaction. In this new reality, the old dealership model, based on haggling, upsells, and financing profits, is rapidly losing relevance. So what does this mean for you, the consumer? First, be cautious about where you buy your next car. If you're considering purchasing from a small independent dealer, do your homework. Make sure they're financially stable. If a dealership goes bankrupt mid-transaction, you could be left with major headaches, or even lose your money entirely. Second, be aware that used car prices will likely continue to fall in the short term. If you can afford to wait a few months, you may get a better deal as the market corrects further. But don't expect prices to crash to pre-pandemic levels. Supply constraints and inflation are still factors. Third, if you're shopping for a new car, watch how the market is shifting. Many automakers are launching direct online sales platforms. You may find better pricing and a smoother experience going this route, especially for EVs. Finally, understand that the dealership experience you've known for decades is going away. The days of sprawling showrooms packed with inventory are numbered. The future will be leaner, more digital, and more customer-friendly, at least in theory. But there will be winners and losers. Some brands and dealer groups will adapt and thrive. Others will vanish. For now, one thing is clear. America's biggest car dealerships are in trouble. The bankruptcy warnings are real, and we are witnessing the slow-motion collapse of a business model that has dominated the auto industry for nearly a century. The road ahead will be rocky, but if you stay informed and choose your buying strategy wisely, you can navigate the changes and come out ahead. Because ready or not, the future of car buying is already here.